We've all seen the horror stories of damp and other issues in properties. No one should have to live in those sort of standards. So I think it's fair that there is some sort of regulation in place that landlords have to abide by.
So Labour's in and we are witnessing some of the biggest changes to the private rented sector that we've seen in decades. The new Renters' Rights Bill has been published. With the news, the government could introduce the changes within this bill as soon as spring, which will impact both existing and new tenancies. Today, I'm actually joined by Dan Standing from Shawbrook Bank to discuss the latest changes and the impact this could have on the market and, most importantly, to mortgages. Welcome, Dan.
Thank you. Good to see you.
Good to see you too. So one of the big changes is basically ending Section 21, how the media is actually described as the so-called no-fault eviction, and actually abolishing fixed-term tenancies with a new robust grounds for requiring 4 months' notice from landlords. Now, how will this impact a lender such as Shawbrook Bank, and will this have an impact when it comes to, for example, if you had to take over a property or it has to be repossessed, and would you now look at it slightly differently?
Yeah, I think from a bank's point of view, it's about understanding what the new legislation will actually mean and how it's impacted sort of the wider sector. I think from a bank's point of view, especially like Shawbrook, if we do worst case scenario have to repossess a property, it's very much a case of, it's not just about evicting the tenant. It's about how can we actually manage that property through until we can either sell it or it gets back on track. So it's not just a case of we have to serve notice to get rid of people. It might be the fact we can collect the rent, depends why it went into arrears and things like that. So it'd be on a case-by-case basis, I would assume, until it obviously plays out in the longer term over the next sort of probably 12 months. So yeah, it's just understanding how it impacts us.
So do you think this is a negative thing from a landlord's perspective, and do you think they're actually losing control? And I've seen online some people saying like rights for their own property that they own.
Yeah, I think in terms of putting these sort of legislation in place, is that very fine balancing act between making sure tenants are protected, which they should be, and likewise landlords are protected. You can't, we've all seen the programmes on the telly where someone's not paid for 12 months and it takes another 12 months to get rid of them. So I think it is a case of just understanding and see how it plays out. I think obviously it's still hasn't come in, it's new. And I think, yeah, it's just very difficult to get that balancing act right between making sure both sides are protected.
So the last time that we met and the YouTube videos out there, we discussed basically landlords exiting the private rented sector, and the stat from The Guardian was 66 rental properties are leaving the private rented sector daily. Now, with Section 21 being abolished, there's speculation that this could lead to landlord flight. Do you see this happening?
I'm not sure you'll see landlord flight in total. You've got professional landlords out there that will have opportunities. I think when anything changes, there's always opportunities for people out there. So yes, look, you might buy 2 or 3 properties, you think it's a great idea in terms of a bit of rent coming each month. Actually, now you might think, I don't need that hassle, so I'll get rid of my asset. But there's a landlord that's got 50 properties, knows it's in a good location, knows the area, and is happy to sort of make a deal on it. So I think it'll work both ways.
And do you think this is potentially have, especially just at the initial period, have an impact on house prices when this comes in?
Yeah, I think potentially. I think you might see a bit of a dip in the rental sector in terms of values because there is that uncertainty of how this will actually play out longer term. So, but yeah, look, potential that it could have an impact initially, and then as I think a lot of things happen, impacts initially, everyone understands how it plays out, and then things all fall back in line.
Sure. One of the other changes being proposed is limiting basically the number of rent rises for an AST to a single rise and it being capped at market rents. What do you think your views are on that?
Look, my own personal views, I think that's probably not a bad idea from a tenant's point of view. Over the last probably 18 months or 2 years now since this trust put the budget in place and put interest rates up, as it were, I think we've seen a lot of landlords knock that straight on to the tenant, which I understand why, because their costs have gone up. Also, it's not fair on tenants in the cost of living we have at the moment. So I think it's fair. And again, tenants know up front, landlords know up front what the rules are.
Yeah, no, I agree. I think that's quite a fair proposal and it suits both sides as well. Now, there's a proposed introduction of a decent home standards to the private rented sector with fines of up to £7,000 if landlords fail to meet certain standards. What are your views on this?
I think that's really important in the current market, that everyone is entitled to live in a property that is up to a certain standard. We've all seen the horror stories of damp and other issues in properties. No one should have to live in those sort of standards. So I think it's fair that there is some sort of regulation in place that landlords have to abide by.
Yeah, no, I totally agree. And there's a proposal for extending Awab's law to private rented sector, basically meaning setting clear timeframes where landlords have to make homes safe and where they contain serious hazards. So I believe this basically relates to a person who ended up passing away as a result of the poor standards within a property which was impacting their health. And I'm guessing you probably think that's a good thing.
Yeah, 100%. As I said before, everyone should live in a property that is at least a reasonable standard to live in. And yes, things will happen in rented properties that need to be repaired. We all know that in our own houses. So to have time frames to say, right, if this happens, you've got 2 weeks to rectify it, I think it gives a clear guideline to everybody involved.
One of the most interesting things that I saw, there was a proposal to create a digital private rented sector database. Basically, this will be information that will be held for landlords, tenants and councils. What are your thoughts on this?
I like the sound of it. I haven't obviously seen it fully, but I think as a landlord, like your good self, that you can go into a database and get data on a potential tenant, that you get that. It's like having a credit search on them almost. When we look at deals, we look at credit searches. As a landlord, you can look at this to understand how that person has performed and think, actually, yeah, it's a tenant for us or not, as it were.
I think if anything like this comes in, then it should work sort of both ways from a landlord's perspective, where if a tenant can look up whether a landlord's been performing well over the decade they've been within the sector, then the same should apply.
Yeah, I think that's
for
fair.
landlords to actually find out about the proposed tenant, because there are a lot of things that can be hidden on both sides, and if there's information out there, it should just be fair from a landlord's perspective.
Yeah, I think that's fair. I think it's good. When you go back to the previous things we discussed around the rules and regulations about standards of quality and so on, database along those lines for someone to look up.
Yeah.
It's balanced.
Yeah, 100%. And there's now proposals to set up a new Ombudsman service to provide fair, impartial, binding resolution to both landlords and tenants. And the idea of this is reducing the need to go to court, which we've seen quite a big increase since COVID-19. What's your thoughts on this?
Yeah, I think obviously COVID-19 had its own challenges, and there's a lot happened in the world since then. Yes, you don't want to have to go to court if you don't need to. And I think with the different rules and regulations they bring in, to have an ombudsman that oversees all that in one place, gives you a decision, it's final, it's fair, it's settled. I think it allows them to track the changes. You go onto that, so you make sure that's okay. You've got the database where they can feed into the feedback on both sides, as you say, and they give a final decision based on what has been presented. I think it should, hopefully, make things a little bit easier for everybody, both sides of the fence.
Yeah, I agree. Now, I've been looking into these proposed legislation that may be coming in, and we've actually been discussing, both myself and Sanjay, the portfolio that we have and what we want to keep and what we may now change. One of the things is just the vanilla buy-to-lets. I just find now, especially being based in the south, that the market isn't really there. And when we're coming up to now with the new rates being back up at 5% around that base rate, the deal doesn't really work. We've got a lot of capital that are tied up, and we're rather focused on multi-let, HMO, commercial residential sort of projects, and put these properties back for sale. Now, are you seeing some of this yourself firsthand from your clients?
Yeah, I think when you look at the south, as you mentioned there in particular, so I cover London, we look at the south a lot, and yeah, the yields with the new interest rates do make things harder to get the money out and without tying too much up. So I think it would be down to areas of the country. I think when you sort of look up in the north of the country, the yields are better. So the rates, yes, they're high, but it doesn't impact what you can lend from a bank's point of view. So yeah, I think down sort of south, for want of a better term, that those single buy-to-lets don't always work. HMOs, 6+ tenants in place, it tends to make more financial sense and fits better in terms of leverage in terms of borrowing.
Yeah, no, definitely. Now, with interest rates also at that 5% mark, before, what we found was the previous 14 years, if you had money people were more inclined to put it into property because you wanted that money to work well for you, because you couldn't really go to the bond markets or having high interest accounts because it wasn't really going to generate you anything beating whatever the inflation price was. But now the whole game has changed. So have you seen investors leveraging out, so maybe still investing in property but looking at other avenues for their money?
Yeah, I think, as you quite rightly say, the interest rate environment has changed over the last 2 years, and savings have become more popular because their interest rate's gone up and that. So there's people putting money away that may be invested in property because property is almost seen as a safe game at times. Yes, the values will fluctuate over time, but on the whole, it balances out. You just got to wait for the right time sometimes. So yeah, we've seen people diversify a little bit, put money in savings, not invest as much in property. But again, I think you get that professional landlord that sees as opportunity, and you've got sort of the fresher landlords, if you like, that have 1 or 2 properties that 3-4 years ago may have invested in property, now might go, I'm just going to wait a bit, put it in savings, I'll get a better return there.
No, definitely. Now, with Section 24 that came in, I believe now, it's probably about 2017, the impacts of it have been felt by landlords because it's 100% being implemented. And we've seen with the partnerships that we've got with Savoys North and obviously what we're doing within the southeast of the country, you have a lot of landlords that had HMOs, the old traditional sort of student HMOs, they're selling them up because they're owning them in personal names, they're getting hit with interest being calculated as profit, and they just had enough. And then you're seeing, what we're actually witnessing is new landlords, investors coming in, sort of repurposing these properties, making fit for purpose. Do you see much of that across the country where you operate? Yeah,
I think that we see a lot of people move out of that individual personal name now into limited companies for the tax reasons. I think I'll go back to my previous point in terms of everyone saw property as a nice, easy win, get a couple of properties, get the rental coming in. Then obviously 2017, it changed the landscape slightly. And yeah, you're seeing people move, think again, financially it's not worth it. You get the people to pick it up, limited company. Student market's quite strong in the right areas. HMOs are strong again in the right areas. Bit of like refurb, and limited company, you're sort of back on track and sort of moving forward on it.
Oh, amazing. Now, we specialise in commercial to residential and HMOs, and over the past 2 decades, we've built up a portfolio of over 700 tenants. Now, if you want to learn more about this, we've got a free webinar on the 26th of September to discuss this. Check the link in the bio. Now, Dan, thank you very much for your time, and we hope to catch up with you soon.
100%.